The NASDAQ was down almost 2.5% today. Look at all this red. I freaking love it. Only a few big greens. Microsoft, they just reported they crushed everything. Visa just reported they did well as well. But Google, the number one stock in the S&P down today, down 9.5%, even though they beat on earnings and beat on revenue last night after the bell. But they missed on cloud revenue, which just shows how ridiculous this market is. Because last year in the same quarter, they did $6.8 billion in cloud revenue. This quarter, they did 8.41, but they missed the expectations of 8.6. What a terrible company. And they lost 10% market cap, $100+ billion.
I truly, in my heart, believe it's over for Google. I'm joking.
Guys, we love red days. We hope if somebody could say to me, Paul, could you have 30 more of these days? I'd absolutely love it. I'd love every second of it. I'm a big believer, and if you really, truly are a long-term investor, you want stocks lower. If that makes no sense to you, and you think I'm stupid for that, not the channel for you. But if it makes sense to you, and you're like, wait a second, I never heard that before, but that makes sense, what's your favorite thing in the world to buy? Do you buy more of it when the price goes down, or do you buy less of it? But yet in investing, everybody wants to see their price go up and they get more excited as the price goes up. Not us. We want prices going down. Almost every single stock I own is down. I expect them to go down further and I encourage them to go down further. That's what I love about the stock market. I love negative sentiment. If you're a long-term investor, you should love that. The vast majority of our viewers have 20 or 30 years till retirement. Even if you're 10 years away from retirement, you still want lower prices right now.
Yep. Get
all that money in as fast as you can into lower prices and watch the market take off at some point in the future. We do it every single day in our community. In our community, I report every single day our stock market to GDP ratio and our 10-year cyclically adjusted PE ratio. You can't see this, it's a little small, 70% overvalued, 70.4% overvalued. I don't care how you argue with me about it. GDP doesn't mean, fine. 10-year PE is 70.4% overvalued. Now, is there an argument to be made that we should expect lower returns in the future? Sure, we just had somebody as a guest in the show, and he was saying it, and his logic made sense. Fine. But how much lower are you willing to accept? 90-day treasuries pay 5.5% today. I know it's only 90 days, but the 10-year treasury pays 5%.
Yeah, that's a lot.
So what kind of return do you need to have stocks for the next 10 years?
Yeah. It's got to, to me,
you need to have 3-4% premium on it.
Exactly.
But right now, we're not valued for that. Right now, you're valued for a much lower return.
Right.
We're not doom and gloomers, guys. We buy stocks. We own stocks. We believe in them. We believe in buying good companies at good prices. And as their stock prices go lower, we want to make sure that our valuation of the company is still solid and just the market overreacting. And then we buy more of the company. We want companies' prices to fall. I have one position that's up 40% and I'm pissed off. I'm literally upset. We talk about it every single day, like, God damn it, why is this company up so much? We literally get upset. If that's news to, if you're like, whoa, what the heck?
What are they talking about?
That's what the mentality I want you to have is. I used to not be like that. I used to be exactly in everybody else's shoes where I was like, oh, I felt good when stocks were up. I felt bad when stocks were down. Even now, we have our community members. Paul, thank you so much. In the last 18 months, I'm up. I'm like, no. What matters is what's going to happen 5 to 10 years from now.
Right.
A great company, Generac, is down 42% year to date. A company went from 80 to 160, and now it's back to low 80s. Did the company really double in value and decrease in value in half because of rational behavior?
No.
No, Mo. It did not.
No.
Look at Apple. Yeah. Apple's up how much this year?
Hell, even look at Google.
Look at Google.
Everything was better yesterday than the last quarter, and it was down 10% basically.
10%.
It was better. Come on.
They even lost less money on their outside bets. They literally lost $160 billion in market cap today. Why? Because they missed by 160 million, 190 million on one of their categories of company. Everything else crushed. The very channel you're watching right now, it's on YouTube. They crushed on YouTube revenue. They crushed on Google ad revenue. This is crazy. But if you're here to learn a process and more importantly, learn the emotion of encouraging a stock to go down and getting rid of all the noise and saying, is the stock down for good reasons? That's the question you have to ask yourself. Google, I'm not saying to buy Google, by the way. No. That's not what I'm saying.
No,
but what I am saying, it's just an example. What I am saying is, If you like Google at 130, why don't you love it at 126? You should like it even more at 126.
Exactly.
That's the point. And it's hard, guys. The emotional side of investing is the most important, and it's the hardest part. But that's why we're here as a channel, to help people along that journey. So please, like the video and subscribe to the channel if that's something that interests you. Make sure you come back and check with videos. We have, well, how many videos do we have now? 2,400 videos in our library, and we make 15 a week.
Yep.
That's the key here. Look forward to these down days. I get so excited when I see the red. Literally, I get so excited. I wake up in the morning, the first thing I do is check NASDAQ futures. Full disclosure, I have a NASDAQ short, so it helps me. But even if I didn't have a NASDAQ short, I still want to buy stocks at lower prices.
Of course.
That's still a fact at the end of the day.
You want to buy everything in the world that you want to own at lower prices.
Let's pull up
your shirt, your phone,
everything.
Your cup, everything. Your house. When you go to buy your house, you don't say, I want to pay more for this. When you go buy a car, you don't say, I want to pay more for this. You try to knock $500 off.
Everybody in the world brags about how they got a great deal on a car.
Yeah, you get 1% off your car.
But only people in our community are the only people I hear bragging about what their cost base is in companies.
Yeah.
Somebody just told me today their cost basis in PayPal is 52. I was like, damn, that's good.
Yeah.
Like, did you start the position today?
Yeah.
I mean,
when did you do that?
Yeah, that's incredible. That's incredible. And it's hard, guys. Look at a company like PayPal. It's at a 7-year low. It's hard to own a company for 7 years, but here's the interesting part. 7-year low. Let's go back 7 years. 1, 2, 3, 4, 5, 6, 7. They did 11.76 billion in revenue. Now they did 28. Okay.
How about profit?
Let's go to profit. 1.5 billion in profit. 4 billion today. And it's at a 7-year low. I'm not saying this means it's a good price. However, I'm sitting there saying, if you're discouraged because you had PayPal for 7 or 8 years, your fundamentals are getting better. Every year, profit's getting better and better, except for this one last year, but I think that was a write-off, but who knows? The point is, every year has gotten better. And if you pay a reasonable price for a company today, as long as the business gets better over time, you will do well with it. That's it. That is it. And the better the deal you get, the better you'll do. If you buy a company for half of what it's worth, and if it only grows 7% a year, you're going to make more than 7% a year because you bought it for half what it's worth, factoring that 7% growth. So guys, the stock market is a beast. It's an emotional roller coaster. I've been there. I still am there. I still get caught up in the emotion of it, but that's why we're here as a channel. Because if the market fell in half tomorrow, we'd be the cheerleaders saying, this is awesome. And here are these great companies you can buy at great prices. So if that makes sense to you and you find that appealing, subscribe to the channel. You will not regret it. And guys, we're going to do Meta's reporting right now. We're going to do a video tomorrow morning at 10 o'clock about Meta. It'll be listed at 11 o'clock Eastern time. So make sure you watch for that. Take care.